Welcome. In today's episode, I'm going to be talking about whether to sell or keep your investment property. So one question I get asked quite a bit for people that own investment properties is whether they should sell it or keep it. And that might be one of the most important questions to ask if you own investment properties. But my answer might surprise you. So by the end of the video, I'll answer that question and I'll give you the details behind my answer and show you a real world example that I've done in my career. So as we roll into this episode, I want to help you understand how economics play a key role in your investment strategies. I'll also cover what makes an investment property a good investment versus a bad investment. And finally, I want to break down for you when you sell, but also why you should sell your investment property. If you're ready, let's go. So let's talk about the economics first, supply and demand. I remember when I first took economics in college, it was a little bit confusing, but I ended up loving it, how it determined the price, right? So the market determined what would happen with price, right? Depending on supply and demand. If there was a lot of supply and very little demand, prices would come down. If there was a huge demand, but not a lot of supply, chances are prices started to go up. And we see that today, we see that in every economy. So there's terms that get thrown out in economics like a buyer's market or a seller's market. So let's jump into that and understand what that means, because if you're looking to sell something, you really need to understand what those terms mean and why they play an important role in your decision to sell or keep your investment property. So what is a buyer's market? A buyer's market is when it benefits the buyer, which means there's a lot of supply out there. So there's a lot to choose from. So as a buyer, you're looking for a piece of property, you're looking for an investment, whatever it is, you go out there and you look and there's a lot of options. There's a huge supply out there. And if there's a huge supply, the only way that the seller can differentiate his or her property from another one, a lot of times, is to lower the price. Unless it's extremely unique or it has some extreme value to it, lowering the price is what's going to differentiate it from all the others that exist when there's a huge supply of homes or rentals or investments on the market. It was back when the economy really struggled in 2007, 2008. I owned a high-end home in Utah and I was looking to sell it, but there was nobody looking to buy because there was a lot of high-end homes for sale, right? So I ended up renting it for probably 3 to 4 years before I eventually sold the home, right? So I've experienced being in a buyer's market where I was trying to sell in a buyer's market. It was very difficult, right? It was a challenging situation. So let's talk about a seller's market. What does that look like? Which is what I wish I would have been in when I was selling my home in Utah. A seller's market means that it benefits the seller, right? Which means there's a huge demand out there. There's a lot of people looking to buy, but not a huge inventory or not a huge supply of homes that are out there on the market. So the seller really has its pick. And we've seen this scenario play out in the last few years, right? Where interest rates were super low 2-3 years ago, and there wasn't a ton of inventory on the market. So you had people that were coming in putting offers on property that were above what was listed price by the seller. And you think about it, that's kind of crazy. So the seller listed it for a certain price and you had people coming in and bidding up the price in that home because there were so many people that wanted to buy that the seller was ripe to take whichever offer he wanted because he was living in a seller's market, right? So if you're a seller and you're in a seller's market, you're in a really good situation because there's a lot of buyers, because there's low inventory, low supply, but a very high demand for what's out there. So understanding the buyers and sellers market can really help you understand when to buy, when to sell. Now let's talk about the current economy we live in right now. We've talked about what happened a few years ago. We talked about a buyer's market back in the 2007, 2008 recession, but let's look at the current economy and what it looks like right now. So right now, you have interest rates that are higher than they've been in a long, long time, for over a decade, right? Pushing 6-7%. So what that has done, it's lowered the demand, right? The demand of people that want to buy a home has gone down because 2 or 3 years ago, you could buy a $300,000 home and have a payment that's maybe $1,200, $1,300 or somewhere around there. But today, you're going to be paying almost twice that because interest rates are so much higher than they used to be. And you get into more expensive real estate, and somebody paying $2,000 to $3,000 more a month for a mortgage payment just doesn't make sense. So the fact that interest rates are so high, it's taken the demand really down for people that want to buy homes. However, you have a lot of people out there that might not even want to sell their homes because their interest rate that they have on their home loan is so low. Why would they sell their home knowing that to go out and acquire another piece of property and get a new loan with a much higher interest rate? Sometimes 2, 3, maybe 4 times what their current interest rate is right now. So we're in a really unique situation right now with the current economy where you have people that own homes with a super low interest rate, because interest rates are so high, not a lot of people want to buy. So that might play into understanding whether you keep or sell your investment property, is understanding what you're doing. Now, investment properties might be completely out of the realm of what we're talking about because people will base their decision on the financial economics of it, which I'll talk about here in a second. So let's talk about investment properties. What makes a really good investment property? First off, you've got to look at it as a business. It really is a business, right? So you want it to be profitable. You want it to be making money. You want it to potentially grow every year in revenue and dropping more to the bottom line. Just like any business out there. Obviously, you need to make sure that revenue exceeds the expenses. And there's a lot of things that could be investment properties, from maybe it's a residential home, maybe it's an apartment complex, maybe it's a fourplex. It even could be a short-term or vacation rental that's an investment property. And if you look at that, the argument for or against it could be a lot of different things. It could be the demand that people want a vacation to that area. It could be regulations that are coming into that area. Those might be decisions for a short-term rental or vacation rental, whether you keep it or whether you sell it. Or let's look at a long-term rental, right? Maybe it's a residence, maybe it's an apartment complex or multi-units. And that might shape your decision even more, because even in the current environment we're in right now, the current status of our economy right now, people have to live somewhere. So if you're renting it out, they're not looking to buy, they're looking to rent. And regardless of what happens, it might actually be a better time to hold investment properties because people need to live somewhere, and they might not want to buy a home because interest rates are so high, but they're willing to rent because they know sometime interest rates might go down and then they'll buy. So maybe in this environment that we're currently in, having an investment property could be a really good thing. So let's talk about why and when you should sell your investment property, or why you should never sell it. Obviously, the reason depends on you and your personal situation. But if that property is making money, why would you ever sell? Now, there could be a couple reasons. Maybe you want your time back. Maybe you've spent so much time managing this investment property on your own that it's consumed so much of your time and you want your time back. If that's the case, maybe hire a property management company. Obviously, you need to understand what that looks like as far as what expenses you'll pay to that property management company. And you might not have the margins to be able to onboard a property management company and still be profitable, right? If that's the situation, maybe you need to sell. But that, like I said, that's completely up to you and your situation. We had a similar experience. We bought a cabin close to Yellowstone National Park, and it did take quite a bit of time. We hired a property management company because the margins were still there, and they actually had a really good outreach of people that they were bringing to the area. So we even saw total revenue increase by onboarding this property management company, even though they were charging a lot more than what we would if we were managing it by ourselves. If it's a money issue that you need to sell your investment property, you really need to look at that, because that's a personal decision. However, I would never sell an investment property from a mindset of scarcity. Now, what does that mean? You have a scarcity mindset or an abundant mindset, right? When you're selling from a place of scarcity, and I even look at that in business, it means that you're doing it for the wrong reasons, right? You're not thinking abundantly, like all the good things that could happen. You're thinking like, okay, I need to do this right now because of this, right? It might be a very myopic approach on what to do and when to do it. If I hold on this for 2, 5, or 10 years, it could be a really good investment for me. So I think having that mindset of abundance is important. You never want to sell from a mindset of scarcity. You know, we've had the same scenario come up on a certain vacation rental that I own with some partners, and we bought it at a fairly high price, right? But it brings in a lot of revenue, but it barely exceeds annually all the expenses, the mortgage, everything involved. And so we've been discussing as a group, do we sell this or do we keep it? And one of the challenges we found is, like, honestly, a few of us are thinking, why would we sell it when ultimately it's paying all the bills, it's appreciating, it's in a good area. We get some of the tax write-offs from the interest we're paying, plus the depreciation. So there's some really benefits to it. I've been in the same scenario myself, trying to understand whether to buy or sell. So I can speak from a place of personal experience that we're going through this right now. And hopefully by next time you see one of my episodes regarding this, I'll have made a decision and I'll let you know what happened there. And finally, let's talk about the ultimate time to sell an investment property. For me, the ultimate time to sell an investment property is when you have another project in place that is going to be equal to or greater than what you're doing with the current one. Now, if the current one is making lots of money and you're in a good spot financially and you've got your time on your side, I would recommend not selling it. But if you're thinking about selling it because you've got another deal that looks just as good or better, then I'd maybe consider that. And if the long run, the potential of the new project exceeds that of the existing one, that's a great time to sell an investment property. And ultimately, I think even before you consider selling an investment property, you should have a plan in place, right? Where you say, okay, at this time, I might consider selling it if all these criteria meet up, or if this next scenario or opportunity presents itself. You know, I have a good friend of mine, he's been a good friend of mine for a long time. He's invested in assisted living centers. And he had somebody come to him and said, listen, I'm doing a development it's going to be a big winner, right? It's going to have this many lots. There's a demand for it. Everything looked good. But I remember him telling me that really stuck with me. He says, I'm making $17,000 a month after all my expenses and everything on this investment property that I have that I would have to sell in order to engage in the development that my other friend wants me to engage into. Why would I ever do that? And that really stuck with me, right? Because sometimes it can be exciting to jump into a new project and the dollar signs might look good on paper. But when you have something so good that's kicking off that type of money every single month, why in the world would you take away from that and invest that into something that's unknown, right? Even if it looks good, even if all the things pencil out, you have a for sure thing right now. And so that's the way that I look at investment properties, and whether you should sell them or keep them. I'd be interested in your feedback. So please comment below. Let's engage in a dialogue. And as always, I've got a free gift for you. It's aaron'sfreetraining.com. It's a short-term rental calculator. You put in the numbers and it spits out to you whether it's a good deal or not, whether you should move forward and buy that short-term rental. And once again, thanks for watching the video. Have an awesome day.